Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, Friday? Hope you guys are having a great day. It is an amazing end of the week day. We are going to do what we do each and every day from reversals and breakout perspectives. So let's go ahead and dive in. The S&P this morning, we are up about 8.5 points. Now, that 8.5 points that were up yesterday, we had a pretty big sell-off, and we had a live trade room. In our live trade room yesterday, we talked about different ways to get engaged with this, where we talked about both confirmation entries and limit entries as the price came down. And price eventually came down to this area here. And this area here was a limit entry. The area up above we talked about as a confirmation entry because it was lower probability. See, when we're looking at trades, we always want to understand that limit entries give us that higher degree of probability. And this one was best because it came back to the origin of this speed candle. So we saw a pretty decent move away from there. And now we've rallied up. We're up about 8 points right now. And so looking at this from a 4-hour perspective, we put in a brand new all-time high yesterday morning, and we are just below there right now. So that, we're thinking about that as a bit of an upside. And when I look at the upside potential, when you're at an all-time high, how do I measure my next move? Well, the best way to measure your next move is to use maybe a Fibonacci extension as your next measurement. So I'll give you an example. On this last move, a Fibonacci extension would be looking at this move up and then the pullback that followed. And what you'll see is that we rallied up right to a Fibonacci extension before then pulling back. So now let's take a look at the latest move up and pullback and look and see where the extension would have us go. Well, we came, right dead nuts on the 100% extension. So since we are, using these extension tools, it's a decent tool to be able to see where price may go in the future. And so now, let's just say we're looking at this area here. Now I'm on a daily chart, but looking at this move, our next extension would have us going up to around the between 30.30 and 30.40 on the next breakout. So looking at that, what I would say is take a look at this area up here for our next breakout as price comes back up into that region. From a reversal standpoint today, there's an opportunity to get short up here. I'm not sure that I want to do that. I'm not sure that getting short is going to make make for the best trade ideas. Just because, when you're trading against the all-time high, going short is definitely a lower probability affair. Looking at today, you might have a little bit of an opportunity to get long right back in here at a retest of this area as we're coming back into there now. Might actually be a bit better, even a bit lower. I think it feels a little bit like I'm forcing trades today, and it might be better off just to kind of hold off a bit on a day like today. Next, we have the NQ. So in the NQ, we had a confirmation area set up. Price blew right through that confirmation area, which is obviously going to happen at times. And so blowing through the confirmation entry, now we're setting up very similar price patterns to the S&P. Although the NQ at the end of the day, we rallied, and I think it was rallied primarily on Google's earnings news off that rally. And so our next opportunity would probably be a next leg higher. And so we are putting in a little bit of potential breakout area right in here. We do still have this supply all up. So, there's definitely the opportunity to take this thing to the upside, but be aware that there is this potential area of resistance up above us. As far as reversals go, this level down here, right in here after the alphabet earnings, it could serve as a decent little reversal point. My only fear is the time of day that it was created. And so once again, don't force the trade if it doesn't seem like it's there. You're going to see that repeated again in both crude oil and gold, although gold, I think we've got one better opportunity. But crude oil, we're still chopping along sideways. Not a whole lot has changed, so there's not a whole lot to add to crude oil. In gold, I do see that we have this little wick over wick area here that might actually serve as a decent reversal. My only concern is the basing that we have before the level. little bit of basing before the level definitely makes that a little bit more of a risky proposition. So you might take that as a confirmation short if you want to take it at all. Remember that in a 4-hour market, we're still chopping along sideways. It's still slightly lower degree of probability. Looking real quick at our bonds and currency markets. In our bonds, we had talked about this ZN level as a potential breakout. Unfortunately, we got no basing in front of the level, which is why we didn't get much follow-through from that area. And so now we are putting in an interesting price pattern here where we have an ascending triangle after a move down, right? An ascending triangle after a move down. This oftentimes breaks to the downside, right? This will oftentimes be a downside breakout. And if it does, I see a decent little area a little further down, right in here, for a potential reversal. Next, the Aussie. So in the Aussie, we had talked yesterday about, we talked a while ago about a breakdown in the Aussie, and we had spoken about the fact that we did have rising trend line, and we'd come back to a supply area, and really it was an inflection point, right? Those market inflection points are super important and things that I definitely want to pay attention to. And so now that we have fallen again, I would look up here as a potential reversal, which is right around the Aussie's market open for the next time the price comes back up into this range. The euro was our best trade of the day yesterday from our live trade room as price came into our euro level, which was this little drop-based drop. We came screaming up into there. Now, what's interesting is we had completely stayed away from the euro on the ECB rate announcement, which is the breakout reactionary trade, and that drove price into our supply level, and we got a really nice move away for about a 4-to-1 reward to risk. So the euro was the best trade of the day in that piece, wound up hitting both targets for that one. So now what am I looking at? Well, this level here, I no longer want to use this one because we traded all the way to the top of that particular level. So now I need to go a little bit, wider out, and I don't, once again, see anything worth jumping on at this moment, right? There's nothing that says, hey, I should trade this thing. So I'm going to leave this thing alone as well. Canadian dollar, we came to our confirmation level, and we gave us a really nice opportunity for a breakdown. So leave me in the comment section below if you saw the breakdown opportunity forming. Although it was not done at a great time of day, this could now be removed and an area where old support becomes new resistance. And let's see if we trade back up into that region. Last two markets, Great British Pound, Japanese Yen. In our Great British Pound, we can see that we have a little bit of we had this same picture that we had in the Aussie, and we did get a little bit of a breakdown from that region. The pound had hit off of a level a while ago, and so we had a little bit of a breakdown, and then gave it a retest, and it's starting to move. So I think that the retest area, which is this area right here, has already been used, and I don't necessarily think that I would want to try this retest area a second time. I feel like it's probably been used up, so I'm going to let that one be. And really, even this area here of demand, which we got one nice touch and go off of, we're basing in front of. So the opportunity is for price to continue to fall. What I would look to see is, do we base inside of this region? And if we base inside of this region, then it might make for a decent breakdown off of that area. Japanese yen, we had a nice touch and go off of this particular little level, and now we are in a price pattern where a little similar price action, a little bit of a bear pennant. So typically on this, the best opportunities are for breakdowns. We have a little bit of demand down here that could act as a stalling point. And typically here, your best opportunities are for breakdowns. But remember, don't force the trades. There's not a whole lot going on today, so don't force the trades. If it doesn't look like something's lining up, certainly don't take it. Allow price to come to you, and especially heading into a weekend. If you hold futures contracts over the weekend, remember how to hedge those things to keep yourself safe. So hope you guys all have a great day, and I will see you Sunday night in the live trade room. Later.